think that you stepped down from the Fed right before the financial crisis, but clearly a lot of deja vu today with that emergency intra-meeting cut. What was your reaction to what the Fed did today?
Well, I should say that I actually was there for the first part of the crisis, and the Fed learned some lessons from that. Steve Leeson mentioned this issue that theory tells us that you need to get ahead of the curve. The Fed was a little bit slow to do that. It really wasn't until January of 2008, after the crisis really started in August of 2007, the Fed really got moving. And here they're doing exactly what they need to do. They're getting ahead of it. They first of all provided a signal that said that we're worried about this issue. We're going to take the steps necessary. And then, boom, the Fed actually did something very aggressive. It didn't do a mamby-pamby 25 basis point cut. It did an intermeeting, not at the regular meeting, 50 basis points. What the Fed is saying to the markets and to households and businesses is that the Fed is going to be out there. It's understanding what's going on here, and it's going to try to get ahead of this, and it's not going to be behind. That's really critical. That's the way you deal with these kind of shocks in the right way. So this is a very positive development. That's the good news. But there is some bad news that the Fed can't cut interest rates that much because of this zero lower bound. So that's a real problem that central banks throughout the world are facing. And the last thing to say here was that a very good aspect of this is this was coordinated. What we saw during the crisis is when central banks did things in a coordinated fashion, the markets took note and it actually had positive outcomes. So I think that there's been a scenario here that the Fed has actually understood, and they're acting on it.
Fred, it's good to hear that you think it's the right move. Even putting that aside, though, to what extent had the Fed made this decision sort of somewhat inevitable by backing themselves into a corner, given their past actions over the last 18 to 24 months and showing signs of stepping in when the market shows signs of needing it?
So I have actually not been a big fan of some of the rate cuts that the Fed had made up to now. I think that they made it look like they were reacting to the market, or that maybe the president was having some influence over what they were doing, which I don't think is the case, but I think it was a problem. And in particular, they were reacting to something that, in fact, we didn't have any information that was going to happen. There were a lot of reasons the trade war that Trump had a very strong reasons not to have a trade war occur. China did too. So for me, that was somewhat problematic. The Fed did not do a great job in communicating. This case, I think they've done exactly what they needed to do, which is here there's a shock. We know that this could be really serious, that people are getting very nervous. People are cutting back their travel plans. My wife last night came in to me and said, we're not going on vacation on March 8th. So the Fed understands that even before the data actually shows that there's a problem, that this shock is going to affect the economy in a negative way. And you got to get out ahead of it. So in this case, I think the communication was spot on, and I think the action was spot on as well, even though I actually have been critical of some of the previous actions the Fed's made recently.
So with all that said, Rick, what does it actually do in practice? What does it do? Create another wave of mortgage refinancing and force a bunch of people into assets like stocks? Well,
so when you lower rates, this is something that's good for asset prices, that it does actually help stimulate the economy. But it also turns out that what's really important is the issue of thinking about whether a central bank is actually getting ahead of, if there's a shock, that they're not sitting around waiting around and they're not deer in the headlights. They're getting out in front of it. That's really critical as well. That's one of the things we learned from the financial crisis. When something small was done in terms of policy by central banks, it didn't work. It just sort of indicated that that things are getting worse. They're not really doing their jobs. It's when you really bring out the big baseball bat, get it out in front, and you don't wait to see a couple of strikes hit you first, but actually go out and hit the ball. And I think that's a change in terms of the way Fed's doing things. This was very much in that kind of strategy.
So what do you think they would say to a Dow? Well, right now we're down 500 on the Dow. We were down 1,000 points at one point. How do you think that'll go over inside the Fed today?
I think the issue here is the market's going to do what it's going to do. Realize that just yesterday we had a huge increase in market prices in the stock market. There is a lot of other information here, which is people are really getting worried about what this coronavirus could do to the economy. Even if, by the way, it doesn't kill a lot of people, it could basically be something that's a big hit. If there's tremendous uncertainty, people are holding back, they don't want to spend, they don't want to fly. You could have closure of factories, and that means the firms can't sell their goods. So there's a lot of uncertainty right now. And so the real issue is not that the Fed did this and the market didn't rise. If they hadn't provided the signal and hadn't done this, then we'd see the market a hell of a lot lower than it is right now and be much more concerned about where we're heading.
Fred, does central bank independence go out of the window a little bit? Not because of the president's tweets, but because of the G7 meeting earlier in the day. And is that something that, in fact, should be commended in a time of crisis and expected?
Not at all. I think that the central bank, what central bank independence means that you actually have to do the right thing. That you have a remit to make sure that you keep inflation under control and you keep the economy on an even keel. And so as soon as you know that there's a problem, you're supposed to act. That's not caving into political pressures or interfering with your independence. That's what your remit is. So the point is that you're given a job. You're supposed to do that job well, but the independence means that you actually have to decide how to do it. And that's what the Fed is doing at this juncture. So I actually think this view that when they do the right thing, that's a giving in to political pressures just doesn't make any sense to me.